So we got the November close for Bitcoin, not only the monthly close, but also the 2-monthly close, which is going to give us a lot of valuable information. We know that November is typically one of the most explosive months. Now, you can't confuse that explosive with directional bias because that is both up and down. It's produced some of the biggest moves. So if it's to the downside, you know, it has the propensity to put Bitcoin into a bear market. If it is the upside, you're talking about potentially Bitcoin in the $140,000 to $200,000 region, and you probably don't want to miss the next move. So let's get straight into the show content. Smash the like button if you are here. Welcome everyone. We have a whole lot to discuss in today's video. I'm bringing you, crypto love and wisdom on a Saturday. So this is a live video, just in case anyone is wondering. This is a live video. So your dailies, we're getting some big moves in the altcoin sector. Look at that. Virtual's up 30%. Dash, a lot of the Dino coins, right? Dash up 32%. Zcash up 16%. We're, of course, still holding that long trade that was given over here in the Discord. I'll just quickly highlight that for you guys. We dropped this all the way back on the 23rd of October, which was only a week ago, right? It took 1 week to play out. That was the ascending triangle breakout, and that is the current chart over there, the current price move into the ascending triangle. We're leaving 20% of the trade open. Even here at 465, we said we're going to evaluate the strength of that move coming into that key level and then determine if we're going to continue to hold that or close it. The answer is continue to hold, do not close. There's a lot of momentum over here for Zcash. I wouldn't close that position. So remain in that trade, right? So for those of you that are in the Discord, you should have been able to participate in that. Also, a quick thing with the Discord, it is officially closing by the end of this live show. By closing, I mean that the doors will be closed, right? So it's going to move on to a waiting list because we've reached essentially max capacity and we want to keep it pretty exclusive. So there is a link below if any of you do still want to jump in very quickly over there. All right, 𝗏 also putting in a big move. We'll have a look at that. Trump, I believe, is for shorting any pumps that occur over there. Look for weakness and we'll look for a short trade. AST up almost 6%. We'll check that one out as well. Pump also up in a similar amount. I do think these are two great coins to hold longer term, but of course we need to see more strength. And the narrative that we've been driving, at least lately, is that it's better to be concentrated in your positioning, meaning you're holding less positions and you just taking each day as it comes, looking for the best trade opportunity and riding that trade. For example, we took the Zcash position that's played out into our targets, and now we just look for the next position. I think this is the way to win in the crypto market right now. I think the way to lose is to hold a crypto portfolio. Well, I don't even think that. We know that. We've seen exactly what's happened to the hodlers of the space, right? And you want to be positioned on the right side of the next move because, as you can see over here, on average, November produces around a 42.5% move. Now, again, that can be towards the downside as well. You can see over here in 2018, you put in negative 36.57% move. That is brutal, absolutely brutal. But then you get upside moves. We should probably ignore the 2013 one, which was 450%, and look at some of the others. 2017 provided a 53% move. 2021 was actually negative. The reason that I'm looking at those two specific years is because those were post-election, post-halving years, which is the current year that we're in. And the expectation was always that leading into the fourth quarter, which you can see over here for Bitcoin and ETH, is where you typically find your top. Now, we'll remind you that there's a potential that happened in early October when we rallied up to set in the high. That is still theoretically in the fourth quarter. And I mean, it would be pretty brutal if you ended this bull market without any form of euphoria, which we haven't actually seen. So looking at the quarterly results over here, on average, 78% moves in Bitcoin. And then if you look at ETH, on average, 20% returns for ETH. And currently, the quarters both negative for ETH and Bitcoin with -3 and -6.6. So we have a lot to look at. This is your 2-month chart, which has officially closed. Now, I mean, some of you might not know technical analysis. Maybe you're tuning in for the first time, but I think the majority of you are pretty well versed. If you've been watching for quite some time, you know how I think, you know what I look at. And the cup and handle formation on both the 2-monthly as well as the monthly has played out in terms of that measured move. There was the measured move. And what do you have now? Pretty bad looking 2-month close. Not great, not great. It did close green, but look at that selling pressure massive selling pressure over there on the 2-month scale. Let's quickly see the quarterly as well. What does the quarterly actually look like before we do drop onto the monthly? So quarterly is still somewhat neutral. I'm going to take it one step further. I actually also want to see the 6-month chart over here just out of interest. Yeah, 6-month chart is not telling us too much. And then there's your monthly, right? So monthly is still putting in a consolidation. If you remove the noise of the wicks and you simply just look at the price chart on a line chart, which just considers the closing candles, theoretically, this is okay. But you always have to look at some of the underlying factors, which is showing weakening momentum. The momentum is still coming down over there, right? So ultimately, you need to get your directional bias correct following the break of the next major move. And we said the break of the next major move is most likely going to occur when you take out the previous month's high or the previous month's low, which we marked out at these key levels, which is going to be coming in, of course, at 126,296 written in blue on the right-hand side, and the downside, $103,516. Now, I think that the optimistic case would be this. The optimistic case would be that you actually see something like this, a quick fake out and then a reclaim, which would mean that there's a likeliness that you would sweep below that $100,000 mark. We really wanted to see bulls close the CME chart strong yesterday, which would line up with the monthly close being strong. But as you can see over here, that's not exactly the case. The monthly did, in fact, close red. And it's a pretty brutal candle over there. Luckily, it didn't close below the orange line at 107. That was where your previous month's lows were, or the previous month's closing and opening lows. But anyways, again, looking for a bit of a shakeout over here. There is a possibility I could see that you could possibly sweep down into about $99,000, losing that $100,000 key psychological level. And then if you do get a swing failure pattern, what is a swing failure pattern? A swing failure pattern is where you look at a strong horizontal area of support or resistance, you lose that level, and then you reclaim. That means that the bears failed to create a new swing low. So you swept below, reclaimed, and then you look for the long trade. This would set up a potential bullish case scenario, right? That would be one of the outcomes. So I'd be watching very, very, very carefully for that. If you do come a little bit low, that becomes the last gasp of air for the bulls, the final opportunity over there. So I'm waiting for that. We spoke about the weekly. Let's quickly go into the CME chart over here, just very, very, very quickly for the weekly to see where that's Bitcoin dominance. For the CME chart over here, you can see CME chart closing the week bearish, close below the 21 EMA. Anytime that we see this, it's typically not a good sign. But the reason that we're looking at that is because more specifically, the circled area that I have over here for the weekly chart is when you see 3 candles like this closing next to each other, especially if this weekly candle closes all the way at the low, which is going to be where those previous candle lows were at about 108,000. Unfortunately, this will start to look like a bearish order block, which makes things heavier, and it starts to increase the likelihood that this is going to drop hard. Right? That is the truth of the matter. Now, there's going to be if bulls rally over the course of the weekend, Saturday, Sunday, and they can send price higher, that will create a little bit of a divergence or discrepancy between the CME chart, which closed negative or bearish, and the spot chart. That creates a 50-50 scenario where leading into next week, we play that game again, the hopium game, right? The game of 50-50 odds where it's really on a knife's edge. However, if this week closes bearish over here, down near this candle or near these candle lows over here, the open and close of the previous 2 weeks, that's going to be, in my books, more bearish, and the odds begin to actually shift more into the bears' favor, that there's a chance that you're going to run down. Now, you want to play all these things together. Remember what I just showed you on this chart. I said if you do see some sort of a deviation below those lows, taking out the previous month's low at that, of course, $103,500 level, well, this is where your massive support level is holding, right? So you can imagine sentiment-wise what the market will look like if this candle closes over here, and then next week's candle opens, comes down, runs all the way down, maybe run all the way into the 0.618 and 65 level, which is coming in at like $92,000 to $94,000. But then you have a big, strong push back up over here. So you run it down, strong push back up, and you close above. That would create this swing failure pattern. This over here, that would be the equivalent of this. And then, as I just said, that becomes the final gasp of air, right? The last final chance for the bulls to get prices higher. And if you can't run with energy off of that kind of a shakeout, reclaim and run aggressively towards the upside, unfortunately, then you have to genuinely entertain the possibility that the top is in, because the MACDs are still coming down strong on multiple different time frames. That is your weekly, that is your 2 weekly. Look at where these moving averages are crossing from. These things have a long way down to go still. And then also your monthly. By the time your monthly crosses, which you're not going to get that now because we need a new monthly close, which would mean November. But by the time the monthly crosses, you well into a bear market, by the way. It's too late. At that point, it's too late. You cannot wait for the monthly. So the 2 week will always turn down before the monthly. The 3 week will obviously turn down before the monthly as well. And look at that. Let's just quickly see something over here. We got about 15 days and 17 hours left to go in order to confirm the 3 week close. And the 3 week, right as of right now, at these current prices, is crossing. So remember, I've spoken about this probably 3-4 weeks ago. I said that the final 2 weeks of October is going to be do or die for the bulls. Very critical, very important that you see them step into the market and defend price. And if they can't do that, the odds really drastically begin to shift for them. Well, that 2 week period has come and gone. So therefore, I have to take a very, very, very cautious approach, right? Which I have been. Anyway, in terms of my positioning, if you're wondering, most of you, I've told you this multiple times, but I'll just tell you again. Very few people, by the way, on YouTube are this transparent, but I'm an open book, guys. I'm a completely open book. My positioning is pretty much fully in cash, and I'm just taking trades independently. So if I see a really good trade setup, then I can easily position 20% of my available capital into that trade, take the trade and move on, right? Close the position and move on. So basically, I've moved way more from a swing trader, which is what I am, into a shorter term trader, given where we are within the crypto cycle and given the risk factors that are currently presented to us. That, I believe, is the best way to go about things. And this has been the case for a few months now. Vote over here, actually. I would love to know your thoughts. Will November be explosive to the upside or the downside? And while you vote, click the like button. Okay, click the like button. Please help us out over there. Saturday shows are always a little bit rough, right? We need to get people are sleeping late on Saturdays. We need to get the UK awake. Those are the majority of the live viewers. And it's probably very early actually over there. So what do you guys think? Honestly, it's over. Downside incoming, 26% of you said that. 58% still hope we're going up. And we have 16% of you, I'm just here for your short-term trades. Look, this is what I'm here for. I'm here for these short-term trades. That is what I'm doing. I look for opportunities. I do give you guys high time frame overviews of where the broader market is going. But as a trend trader, this is the way that it works. And I'm going to quickly just highlight that very, very, very quickly to make you guys understand the way that I've operated throughout this bull run, right? So over here, we knew that it's a bear market. We look for the opportunity based on multiple technical factors, falling wedge, negative funding over there, which is also known as backwardation, multiple different things. Basically, we got long at $16,200. Only about 12,000 of you were there for that, because I remember I was on holiday in December at the coast doing videos using my very, very bad quality, low quality MacBook Pro, my old MacBook Pro camera. So I remember very clearly that video is still there with the thumbnail with the falling wedge. We got long over there as a swing trader, basically positioned full on in 100%. Of course, I earned more money along the way, which I consistently reallocated on each of these range lows. And we rode the wave all the way up and then started to get a bit more cautious round about this period over here. Took a little bit of profits, reallocated into some swing trades, rode this back up over here. And I think I'll better be able to show this to you on the daily time frame. Where I really started to get mega cautious was here on this candle. This $123,000 candle. Why? Well, because we had reached the timing cycle end 1,068 days later from low to current time in the market. We're now beyond that, right? So this was approaching that 1,050, 1,060 days, somewhere around there. But more specifically, when price is breaking out into new all-time highs, followed by a bearish engulfing candle, I start to get a little bit cautious when it lines up with the timing cycle end. And that's what happened, right? So there it is. you got the bearish engulfing candle, price came down over there and obviously went down to those range lows, right? So we did rally higher, but since this point in time, I've been very, very, very cautious in the market, and I believe that it's better to look for shorter term trade opportunities. Alrighty. So therefore, this is a range low, this is a support level, and we are still looking at the weekly chart over here, which I just want to show you one more thing. This will line up with the hopium case. This weekly candle closing over here will allow the RSI to test into this 50 level once again. And if you can close over here and start to move up early November, which we said the pendulum will swing into the bull's favor, but it's getting super sketchy at the moment. That allows for an opportunity maybe to go higher. Now, if you do get that move towards the upside and prices do start to trend higher in early November, what I want you to look for is vitally important. It's going to be a shift in the momentum oscillators turning back towards the upside, MACDs starting to work their way back up. So from the histogram going aggressively red towards the downside, you want to start to see that lighten like this, right? You want to see that lighten and start to turn back towards the upside over there. You want to see as well volume coming back into the market, which has been one of our indications, right? That's been one of our indications over here. We said on this pump over here, there's your volume. We said on this pump over here, there's your volume. We said on this pump over here, there's your volume. Declining. Each pump declines the volume, which equals a massive warning sign. We said be very, very, very careful of that. Plus, we said look at the daily exchange volume, which I've just refreshed this right now, right? This, unfortunately, we need to wait about an hour or so for this to give us the 1st of November data. That's when it refreshes. But as of yesterday, you actually did get a little bit of a curl towards the upside. So the hopium case is that the volume comes in and you basically don't break below $100,000. But price action is king. It's the most important thing. Higher highs and higher lows, or lower highs and lower lows, or are you above a key level or below a key level? Meaning, are you above support or below resistance? Well, as of right now, we have been putting in still lower highs. You attempted to put in a high low over here, but it is still lower highs throughout. And this yellow boxed area, which we've been adjusting, we said is going to be a risky environment leading all the way into that. Now, there is a possibility that this is the major low, but we need to see a bit more strength come into the market. And that had always been the plan. The plan had been we were targeting over here into the 50% fib, potentially as high as the 0.618 fib retracement. It never got there, but it got to the 50% level. Strong rejection on a TD sequential 9 top, pull back 1 to 4 candles, and all of the receipts are here for you, right? So let me actually just find this comment so we can just cook someone again. Wait 1 second. Here we go. Look at this loser. Bullshitting again, the best hindsight trader. What an absolute joke you are when every single thing is in here as receipts. Every single thing that we've looked at is in here. Let's just quickly pull all of this up so we can bring a bit of proof over here. We were looking for the Monday range trade long. Every single thing is in here. There was the long trade into the 50% level, looking for the rejection off of that 50% level with a TD sequential 9 top. And consequently, their price came down into the key support exactly like we were looking at. Unbelievable. Honestly, what shows are you watching? Anyway, obviously it's first time over here. So let's continue. Let's continue on over here. We got a few more things to go through. Everything has been dropped over here for you guys. There's the trade, the Zcash trade, every single thing in real time, right? So yes, as Mumo Evans says, have fun staying poor. Goodbye. Thank you very much for coming. All right. So what we're looking at over here is the current fib retracement levels from the high to the low. There is a little bit of resistance over here. Price is struggling over here, which is why you still need to remain cautious. Now, if you can start to rally a little bit higher, it's going to be a good sign because firstly, you'll be recovering your pivot level. Your pivot level is referencing the RSI on the daily time frame. Right now, if you remain over here or any lower, that RSI on the daily time frame is going to trend lower and lower, and it tends to act as resistance or support, which is the yellow line, depending if you're above or below it. Right now, you're below it, right? You're below it, which means it's testing and resisting from the 50% level at 109,000, which is not a good sign. Remember, we planned for that move down into the golden pocket. We got the reaction, but it never followed through. If you do start to get follow through, that's going to be the first thing that you're looking at. So personally, I'll just wait for some high time frame break of structures. I do believe that right now you are safer to get long higher than lower, right? What I would rather do is and I'll price label this because we're not hindsight traders. I would rather see price get above $116,391 and hold there with a rise in volume, which may come next week. There's a real possibility, right? You may see something like this. If you do see something like this, even though, yes, it's higher, this is what people that aren't traders don't understand, is it's about that confirmation, reclaiming the mid-range. This has been a long-term range, reclaiming the mid-range while simultaneously reclaiming your lower high structure would be a break of structure. You're changing the market conditions over there while volume is rising. I genuinely don't know how to make it any more simple, right? Okay, for Laszlo the loser, I don't know how to make it any more simple for you. But this is what you're looking for, right? You want to see a price move up over there. Otherwise, what you risk seeing and what you risk having happen over here is a move up, another rejection, and a sweep down lower. Now, we want to do our business at the extremities, which means if you do see that, do not forget what I've covered over here. If you do push up, reject, come down into the $100,000 level, specifically sweeping that into, like, call it 99,000 and whatever, and then reclaiming back above 103,000, that becomes a swing failure pattern, at which point you want to go long. But the reason you don't want to play silly games right now and jump in front of the bears who consistently have shown over the past couple of weeks that they hold the momentum, why you don't want to step in front of them is because of this chart over here, which shows the Bollinger Band width percentile is expanding. This tells you you have a real price move, right? This is the actual trending move that's taking place over here. You got your Bollinger Band width percentile above the 10 percentile mark. And as of right now, you have the white line, which is your moving average, also crossing above that. And that there's no guarantees. Nothing's a guarantee in trading and life. It's only probabilities. But what this tells you is that there's a high likelihood that this is the real move that's taking place, right? So I know we've spent a lot of time on the high time frames over here today and not on the low time frames yet. But the reason that I wanted to cover this is because we now have a monthly close, which makes it very important, right? It's vitally important that you understand the context of these high time frames. So what is the context? Let's just summarize a little bit of what we've said. The context is that the monthly is, and the 2 monthly chart is a bad close. It's not good. It doesn't look good from a structural perspective and from the anatomy of a candlestick perspective, right? If you study candlesticks, big rejective candle, not good, right? That's the first thing. The second thing is the weekly is still theoretically in neutral territory. The weekly is not completely bearish. In fact, you're still in a bullish demand zone in the form of an order block. But you're spending a lot of time over here, which is allowing the momentum oscillators to catch up and roll over, which adds additional pressure. Okay, your RSI could find support over here like it has in the previous times that are highlighted in pink over here. You can see each of these consolidations or corrective phases, like I've highlighted also with the green bars. It says 8 bars, 9 bars, 5 bars. And I guess, well, right now we're a little bit further along. We only 11 bars. Suggests that there is a bit of hopium, that it's just consolidation and prices will head higher. So what do you do with this? How do you unpack this information? Well, if your monthly is looking, you know, in terms of candlestick analysis, bearish, the structure is still up, but the candlesticks are looking bearish. Your weekly is looking neutral, and your daily is still bearish. Well, at the minimum, you want that daily to snap back up before you get long, which is why I said you probably want to see prices still get back above 116,390. So, of course, I know you guys don't want to buy that high. I did speak about the long trade setup coming into this region over here, but I said if you do take that trade into that 0.618, you want to eliminate the risk as soon as possible. So it all depends on how risky you are as a trader. As a low risk person myself, a conservative person, because I obviously don't want to lose all of my money, I would personally rather wait for this, right? I want to see price either come up a bit, reject, set in another high low, at which point we now have 1 low, 2 low, 3 lows, and that might increase the probability that you can build up enough momentum in that third high low to get prices higher. So it's either I enter here, which means first we have to go up, down, put in a high low, and then I enter, now I have a close invalidation. Or B, the alternative is this. The alternative is maybe you don't come back down, you just rally straight through. If that happens, that is fine. I would still expect a rejection from this order block. I do not think you're going to pass that on the first attempt. I think you would rally up into that. You would reject, and then we'll buy the pullback, which would probably be a 50% level that's going to line up somewhere around here. So therefore, we would enter into this over here, and we can have a look at this quickly. So let's just go with, this is obviously a bit of speculation, but there you can see it. That would be from the low to, we're speculating where the high would be, into the 50% level. I would then enter over there with much higher likelihood, because I would have new information that price has been traveling up, and what I can study, what has the volume done? Is the volume traveling up with the price? If it is, that's a good sign. That's what we want to see. Like this. This was a little bit of a better environment. Look at the volume over there. All right, versus the recent volume that we've had, which is not good. Okay, so I hope that makes sense. That's what we're looking at over there. As Supporter says, you know, hardest cycle ever. It has been difficult, especially if you're very into altcoins, right? Which I'm assuming some of the people in the comments that, you know, get upset, that's probably their case. They're just down bad. I actually should just feel sorry for them, right? They're just down bad and they want to shout at someone. So it is what it is, right? It is what it is. Okay. Here's a question. Sunder says, you know, what about the death cross? The death crosses typically, this goes for both golden crosses and death crosses. These things typically create a magnet-like effect where you can assess what price does following the cross as it pulls back into it like a magnet. So let me illustrate a little bit better with an example over here. Let's just have a look at this over here. So what I mean, if this is your price chart and these are your moving averages, and you're talking about a golden cross, right? So that's where you have a high time frame moving average, usually the 200 moving average, and then you have the 50 moving average, which is crossing. Okay, so yeah, the 50 moving average is crossing. There's the crosses. So therefore, price is above it, right? Price is usually overextended. What will typically happen at the point of that golden cross is price will pull back into it. And then you can assess what it does after that, right? Usually that is most of the time a buy into the golden cross. It does become a buy when it hits it, not up here. Yeah, it becomes a sell because you're going to typically mean revert. So mean reversion is where price snaps back into the fair value, which is more or less where that golden cross takes place. So you pull back, you bounce, you take the long trade. If that bounce leads into a lower high, of course, then you exit the position. So it will be the same thing with a death cross, right? In this instance, you have high time frame moving averages coming like that, you know, towards the downside. And then you have a lower time frame moving average, which is catching up aggressively because price is trading somewhere down here. And then you get the death cross. Price will usually rally into that death cross. Okay. So that's what you're going to be looking at for that. That's a great question over there. I'm glad you're here to learn. All right, next. So let's quickly check the Whale Trades website over here. We don't have a massive skew. In fact, the current skew that you have is 0.25% positive, which actually favors the bears since the volume is low. That might confuse some people. It's not that positive, but if it gets more and more positive and they're still struggling under a key support level and the volume is dropping off, this is a warning sign, which is what we've spoken about for weeks now. Okay, that's important, right? The fear and greed is in a decent zone for a reset at 33, meaning the market is still in panic. We have very, very, very low liquidations, not much liquidations over here, right? You can see 214. So very, very thin order books is what I should rather say, which means it takes one big player to come in and they can, you know, drive the next big directional move. The daily exchange volume is starting to tilt up. That's good. We've looked for consecutive negative outflow days and weeks. We'll see this week's probably going to be negative. We're getting there. We're getting there. This typically elicits a reset in the market. And what we've been looking at is for this ETF flow to be negative multiple weeks in a row, while simultaneously that RSI comes down into the pink zone, which is now what we've officially got. So there is hope for the bulls, but their time is definitely limited. They're running out of time over here. What else have we got? Let's just actually quickly check this in terms of the crypto market RSI heat map. So very, very few coins are trading up here. Look at that Zcash trending, right? 90 to 100 on its weekly RSI. This thing's absolutely pumping. Now, if you're looking for short-term long trades, this is a useful tool because all you have to do is come here and just look for things that are actually moving into the red zone, the strong zone, strong or overbought for short-term trades, right? Not for long-term swing trades, but short-term trades. These things are typically entering into trending moves. So no surprise that 𝗬's in there because that was one of the coins that are up 21% today. Dash is in there. Zcash is in there. So in terms of the top hundreds, use these tools. Site's free for you guys. Let me check the flows quickly as well. Let's go into the weekly. It's probably going to be similar. Zcash, Trump, Bitcoin Cash, 𝗬, and 𝗬𝗓 is where the majority is. Interestingly, one of the biggest short positions on Hyperliquid right now is actually on virtuals. Somebody is $8.66 million short on virtuals, which is up 30%. Let's see that chart over here. Let's just quickly have a look at this. Wow, interesting. Maybe they're shorting into that resistance. Interesting. What else do we have? Okay, largest whale position is actually 2.86%. It's 2.86 billion short, which is also large. High impact data. Let's just quickly go back over there. High impact data coming up for the next week. I know it's a Saturday, but let's anyway just check. Maybe there's something coming up on Monday, which there is. It's the manufacturing PMI data. That's Monday's news-driven event. So we'll keep an eye out for these things. We'll get into altcoins in a bit. Here's your liquidity chart. You do have liquidity building overhead. What I typically look for when we see this is we go into the Discord as well under institutional charts where we share the high-level data from High Block Capital. Negative, 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 negative. Usually we look to counter trade this. But what we want to see is we want to see a bigger buildup of liquidity, which I guess this is decent for a daily. Anything over 20 to 25 million is usually a draw. What do I mean by draw? Well, when you see those numbers, anything over 20 million on a daily typically creates a draw towards that liquidity, which means price could snap up to about 111,633. But I'd feel way more comfortable taking that long trade if the skew accelerates more positively over here. Excuse me, other way around, more negatively, right? So I want to see like 55% short versus 45% long. That's what we're looking at. Okay. All right, let me check the comments over here. Do we have to cook anyone else today? I hope not. I don't want to cook you guys. Let's all be nice in the chat here. Okay, let me see. Let's see. Okay, yes. Uncle Mornay says, when is my first stand-up comedy show, Roasting Keyboard Warriors? I mean, you guys should clip it. You guys should clip it. We should set up one of those WAP things where you can clip these things and you get paid for the clips, right? Okay, moving on. So we've covered that. These are the important factors that we're looking at. We spoke about USDT a lot. Every day we speak about it because this is probably one of the most important charts that's out there. And really, we can only start to position into longer-term swing trades and say that the trends are firmly back towards the upside if you start to break down below this. So this is an example of the golden cross, right? Here you have a golden cross on the daily between the 50 and 200. At that point, price, or in terms of the USDT market cap, the candlesticks are traveling much higher, right? So you mean revert, you pull back towards it. But if you pull back towards it and you test it as support, it usually means that this golden cross is intact and might send the candles higher, which is obviously bearish for the rest of the market. So you've rejected here from multiple times, but if you go on a lower time frame, let's just see this 12-hourly. This is a vital lesson, right? This is very important for your own positioning in the market. Do not fade this. Do not fade this. And what am I talking about? You guys know that I talk about the more times you hit into a key level, the higher the probability that you're going to put in a real, genuine move. How many times have you hit this level? I'm not even considering that wick. By the way, we're ignoring that. But the USDT dominance attempted to break out here once, twice, 3 times, okay? The 4th time is usually the most likely to lead to a real breakout. Therefore, if this pulls back and sets in a high low, meaning you do not take out this low, you start to create an ascending triangle over here, and the 4th attempt is going to break that thing out. This is the exact same trade setup that we took on Zcash, which I'll go back to. Take me there. Wait, let's try that again. Take me there. Take me to Zcash. There it is. This is the exact same setup, right? Multiple tests into a horizontal with rising higher lows, equal highs. That is your ascending triangle. And boom, what does price do? What does price do? Now, this is the case for USDT. So basically what I'm suggesting over here is you need to be vitally careful into this. If you cannot break this down, you cannot get long, in my opinion. You can take low time frame trades and look for isolated coins that are moving, which is what we've been doing, right? Zcash is up nicely. What other ones have we taken? We took Pump, but we already closed that trade. That was one of the other trades that we took. We had Asta, we closed that position as well. We didn't take Dash or Tau. We missed those ones. Any other ones over here that we've taken? So taking trades in isolation as an intraday, intra-week trade idea is fine, but just blindly longing across the board is insanity unless this breaks down. And this is my level. Again, I don't know how to make this any more clear. Look, guys, I know there's like 0.1% idiots in the chat and 99.9% geniuses. So you guys understand what I'm saying, right? You understand what I'm saying. I think it's pretty clear. And if it's not clear, seek help. Okay. Okay, cool. We got that out the way. Everything's done. USDT dominance on the weekly still trading above the yearly open. Alt season only occurs if you break down into basically below 3.63%. There's a lot of work to be done over here from the bulls. They're fighting hard. They're fighting really hard to hold the 3.63 trillion level on the total cryptocurrency market cap. And it's a grind. It's an absolute grind. This is your bullish order block. This is what I said about the weekly earlier, where theoretically you're coming into bullish demand. That is your bullish order block on total 2, and it looks similar on Bitcoin, similar on multiple different assets. But it's a grind. It's a painful grind for the bulls over here to just fight to kind of just turn this up bit by bit. If they can do that and you successfully look like you're printing a high low, then you're talking about a move up here to 1.618 fib extension, which is 2.14 trillion on total 2. And I think my messaging has been clear. Best trades, BTC, Ethereum, and then of course, we took Zcash, which has a lot of relative strength. But if you are allocating into the market, BTC and ETH, those are going to be your best options. And the reason why is because ETH BTC is still in an uptrend. It's still holding that 0.382. It hasn't actually perfectly tested it again. Testing it will fulfill some of the inefficiency or wick that occurred back here on this candle on the 6th of October, which means the ETH BTC ratio had moved down to 0.03355. Okay. All right, we'll have a look at a few things. Here's a good question as well. These are thinkers, right? We have real thinkers in the house. Very important. I'm glad the majority of you are smart. I have to look on my other screen to pull this chart up for you, but this is important as well, right? I'm going to pull it across, and you tell me, is this bullish or bearish? This is the DXY. The DXY is the dollar measured against a basket of other different currencies around the world. And typically, if the DXY goes up, well, that means that the dollar is strengthening. But everybody is talking about the death of the dollar. Now, is it bullish or bearish? Okay, there is the dollar hitting a multi-decade. This is not a 5-minute chart, guys. This is a multi-decade from 2008. 2008. Actually, it started in 2006 when you broke this down. You started to establish this parallel channel, and that's your multi-decade trend line. And right now, this chart's moving up. It's moving up. So if this had to really get aggressive in terms of a rally, now there is a chance that it does that. Possible, of course, possible. Slow moving chart. We're on a weekly scale. Actually, we're on a monthly scale. We're not even on a weekly scale. We're on a monthly scale. But ultimately, my expectation is that, this chart is probably going to maintain this trend. And if you start to close multiple candles below, then yes, you'll probably drop down to 81. At that point, yes, the dollar's cooked, right? Then there's going to be big trouble in the world. And, things like Bitcoin would probably do well in that environment. But I don't necessarily think that that's happening. I think that you have to face the facts that we've played out 3 years of a bull run, and we're more likely than not at the end, if not already over. That doesn't mean there's not money to be made. There is money to be made. But if this rallies up like this to the top, I would expect that's what will usher in the bear market. And that's where this is where you buy. This is where your lows occur, right? You can see over there, this Bitcoin bottomed in, was it? Yeah, 2023. So there it is. DXY hit a top on the 1st of September 2022. Bitcoin bottomed on between the last week of December and the first week of January, which was like here, a couple of weeks later. All right, cool. Anyway, we got that out the way. Let's move on. We'll go into altcoins. We'll have a look for opportunities over here. Hindsight trader, what an idiot. Let's just delete that. Anyways, let's move on. We'll look through altcoins. Guys, there's a great incentive as well for those of you that want free money. Let's calculate the percentage that you'll be getting. Free money, right? 20% trade immediately. Deposit $2,000. Straight away, you get $400. There's no funny tricks. You don't have to do anything. This is a one-time offer from the 1st to the 8th of November. This is with BitUnix. Very, very, very good exchange. I actually asked for them personally because I think that in terms of things like their copy trading and stuff, it's absolutely amazing. And we did set that up as well in Whale Room at one stage. So for those of you that want that bonus, there's a link over here. It is going to be first come, first serve because it's almost too good to be true of an offer. But it is real. It's real, guys. You can go and check it out. So click that link over there to BitUnix, deposit $2,000. Instantly, you get $400. If you want to go as much as $5,000, you get $700. The real bang for your buck is on this one. $2,000 deposit, you get $400. It's immediate 20% profit, right? How hard are you fighting for 20% in the market? You just get it right now. Okay. PMG George says, I want free money. Bounce, so I cut it off. You might be having a bit of a transgender episode soon because it doesn't look like we're bouncing unless you're trading the right coins. Okay, let's go. Let's have a look at a couple of the alts. We'll go through some of the majors, just see what's going on over there. But I really specifically wanted to spend a lot of time on Bitcoin with you guys today, just because it's vitally important with this monthly close, right? George is laughing at me. Please do not cut it off, George. I do not support the other side. Okay, let's go. ETH. Okay, weekly. We'll go into the weekly. Hopium case. Still building a long trade over here. I'm still building a long trade. Despite how scary it is, if this week rallies up on ETH, next week starts to close green, this looks like a high low. It was a buy. I am longing ETH here. I am buying into ETH over here. This is the trade setup. Now, I'm not going in with size. I'm going to be honest with you guys. I'm not going in, with millions and millions of dollars, but I am going in with, 5 figures. I'm taking the long trade over here. I am in the long trade over here. This is the setup. I'm scaling into the position right now, and we're looking for a price move up to almost $7,000. We are hoping that bulls can take control. They're looking for the trade of the day, We're going to look. We're looking now. It is a Saturday, so the odds are a little bit skewed. The trade of the day may actually come up next week because we need the Monday range to print, and then we're going to have a great opportunity over there. Zcash, incredibly powerful. We, of course, already covered that. XRP slowly making its grind towards the upside. Of course, bullish if it can start to get back above the yellow box. $2.90 to $3. Solana also slow grind over here, attempting to work its way up. I spoke about this yesterday, and I said theoretically you could have gone for, or the day before yesterday, it was on Thursday, you could have gone for the long trade into key support, but it's really just very, very, very choppy in that environment. So a lot of chop. Okay, Sui fighting back over here. Needs a lot more work. Untidy chart. It's either it hits under $2 into the yellow box, or B, you start to print multiple candles in a row that shows that the trend is actually shifting over here. What else? Let's just go to some of the things that are, doing well. Let's have a look at Asta quick. I just want to check out Asta. Not that it's doing well. I just want to see. Yeah, not enough. We need more information. Not enough info. Virtuals. Let's go to Virtuals, which has got a massive pump on right now. Virtuals USDT, here it is. Okay, huge move. Wow, big move over there. Obviously, you can't take any trade on this right now. It's already, the weekly looks strong. Yes, the weekly could have continuation. There's gonna be resistance over here at about $2. let's just mark out that weekly resistance and see how that lines up with the dailies, right? So let's quickly see and move on to the daily. Yeah, look, in terms of taking the trade over here, you probably got a bump and run. We spoke about some of these bump and runs yesterday, and I can't remember exactly which charts they were, but if you guys remember, remind me and we'll relook those. But for this, you're going to now need to see a reclaim and a consolidation above the highs. If you get that at $2, that becomes a longer term trade where you can trade that up higher. Okay. What else? Let me just scroll through over here. Which were the ones that we're looking at yesterday? There were a few that I said when we really searched for the trade of the day. Do you guys remember what those were? And I said there were two charts that were specifically coming into bump and runs, potential bump and runs. I'm checking the chat. I know you guys pay attention. So let's see. Aero, was it Aero? I think Aero was one of them. Yes, Aerodrome was the one, right? That was one that we're looking at a potential bump and run. So let's drop onto a low time frame. Look, in terms of the 4 hourly, it doesn't look too bad. It's not too bad, but the daily doesn't look great. You could take a stab at it. I'd wait for a little bit lower. You would have to kind of go with the approach of where you're permitting in, right? Stops go below here, permitting in. So you could theoretically start to enter smaller parts of the position and get that bigger and bigger as it moves lower and lower into the bottom of the pyramid, hence the permitting in. Let's actually make it super neat and tidy for you guys. There you go. So you're looking at something like that, right? You're looking at something like that. Smaller buys over here. If the closer you can get towards these lows, potentially you start to hold that trend line over there. That becomes the perfect bump and run because then you're retesting into that level. But you have to be careful, guys. Very, very, very careful. These, I mean, the alts are just terrible. Any trades that you're taking over here, in my humble opinion, have to be shorter term trade ideas. Like you're just taking the trade and moving on. The other one that I brought mention to was 𝗕𝗏, right? Let's go to 𝗕𝗏 because I said there must be market makers involved over here and they're just defending this trend line. Look, the more times you test into a trend line, the higher the likelihood is that you're going to break below, and all of this is liquidity underneath. But at the end of the day, if it's driven by market makers and they just keep pumping this thing, this would theoretically be the bounce zone. So I would just monitor this on like the hourly and, have a low time frame trade entry on 𝗕𝗏. Anyone that's coming in with 6 figures, you're going to get wiped. They're going to wick you down, right? But if you're taking smaller trades like 4 or 5 figures, it's probably okay. All right. Let's scroll through the list. What else do we have? What else? Okay, let's look at 𝗬. Okay, 𝗬, yeah, it's strong. It's now reclaimed. I said that I would have been taking profits into this mid-range because I said even if you do run through, you're probably going to pull back. So if you are long on this, expect that. I think that would still happen. I think that even if you run a little bit higher, imagine a bit of a range quarterly. So you got your range high, your mid-range, and over here is your range quarterly. You're probably going to run into that, and then you're going to throw back into the mid-range. And if that mid-range level holds, that's the level. Oh, hype. Yes, the other one that we spoke about was hype. It didn't hit 39.70 was the level. Okay, let's have a look at hype. So I think hype was the best trade opportunity that we mentioned. Where is hype? Hype. Where is our? There we go. Perp dexes. Okay, that was the long trade. So you haven't hit it yet. Let's relook this. So this was the setup. That's what we're looking at as hindsight traders. This is what we're looking at over here. I don't know if I take it over here. It's not high probability. Like I still think high probability is just wait. Either you get this or you miss it. So I would wait. Let's look at the daily. Yeah, it's random. It's a random spot too long. Is it possible that it puts in a high low and just rallies? Absolutely, it's possible. But I would wait. I'm not going to take this. I will keep this on my watch list. And in actual fact, I'll put even an alarm over here on this trend. Let's put an alarm as it comes into this zone. Okay, there we go. So I set an alert. If it hits that, I will look to take, because it first has to hit that, and then we'll see the reaction off of that. So I've set an alert on that. I do think that this will be one of the better setups, because look at your 8-hour chart as well. This is your demand zone. This is your bullish order block that led to that move up, this whole area. Hence why we picking the spot. And then we're going from these lows, not this low, because this is an inefficiency wick that was driven by forced liquidations. So we have to consider the actual closing candle lows. We measure from the low to the high. That gives us our 50% fib level. And then after that is the 0.618. Look, these 8 hours, they look like they want to reverse. And you do theoretically have this fair value gap that's been tested multiple times from this candle. So it is possible. It's just you have to manage your risk. I guess you could be looking at a long as well like this, just below those lows. But you see what I mean? Then you're just going to you're going to stop out straight into demand. So it's a bit of a tough one. You can't win them all, right? Sometimes you have to just wait. And either you get the perfect setup or you miss it. And it is what it is. We'll just wait for the next one. Alrighty. What else have we got over here? Okay, yeah, traders crushing it over here. 331% long, 280. So getting virtuals over there, good stuff. Well done to all the traders in Whale Room. Really, really good job. Gold as well, crushing it. We trade a lot of gold. One of our traders in Whale Room seems to have positioned more. This is Farouk, mostly into gold trading. There's all of his gold trades, absolutely crushing it. Gold, 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 gold. Everything over here is just gold trades. But we'll relook that stuff next week. For those of you that are not yet in Gravity, remember, Gravity is where we're trading Zcash for those points. So if you're not in there already, 1,300% up on that trade. We're trading it for the volume. I've left the airdrop calculator as well below for any of you that missed out. Just click on that, right? Click on that calculator. You can see what your points are worth. Basically, around like $50-60 million in points, you probably get $1,000 airdrop. So if you want, use that link over there. And then also BitUnix is your free 20% trade straight away. Deposit $2,000, get $400. All right. I wouldn't short Zcash. I wouldn't short Zcash personally. I think it's got a lot of momentum behind it. It has met the measured move of the ascending triangle, which is where our target was. We took incremental profits. I'm leaving that last 20%. I'm not going to close that. Okay, I'm not going to close that position. Other than that, I do appreciate all of you. Thank you so much for joining. I do apologize if I offended anybody that got roasted today, but it is what it is, right? You pick a fight, I'll finish it. I'll see you all on the next one. Have a good day and cheers for now.